Hello, it's Jeffrey Christian from CPM Group. Actually recording this Thursday evening around 5 o'clock in New York. We'll release it Friday morning. It has been an interesting week. We sort of thought it was going to be, and it certainly seems like it has been. The events in Washington this week are not over. We think that there are going to be problems from now until the 20th or 21st of January, at least. Clearly, the U.S. government feels that way because they're moving Army troops from around the eastern part of the United States into Washington. It's very similar in some ways to FDR's first inauguration in 1933, when the inaugural committee suggested they not have a parade because of security issues in a very, very, very divided country. I don't think it's quite as bad as it was then, simply because we're not in a recession as deeply as we were then. We have Social Security and other entitlement programs that protect people more or less. So it is an interesting time. There are some historical parallels. We've never really been here before. We've never had domestic terrorists or insurrectionists storm the Capitol building the way they did yesterday. I think that there are longer term issues that are going to take many years to resolve and reunite the country. Again, going back to the 30s, we had National Socialists and Democratic Socialists and Communists and all sorts of other groups that were politically powerful and active in the 1930s. And that period of division really lasted for at least 8 to 9 years and only ended after we entered World War II. Hopefully we don't enter World War III in order to reunify the country, but hey, you never know. We now look at a Biden presidency, which will start in 2 weeks' time, with a Democratic control of both houses of the Congress. That's interesting. A lot of people think that it means that we'll see more infrastructure spending and more stimulus spending. I do think that that's probably true, but I look back at 2009 with the beginning of the Obama administration, when the Obama administration was focusing on the $1.4 trillion deficit that it had inherited from George W. Bush during the global financial crisis and Great Recession. And it also wanted to push healthcare. And its major problem with Congress was that the Democrats in Congress wanted to do even more. And the Obama administration wanted to pace itself and pace spending and try to deal with that deficit. So it found itself cooperating more with Republicans in Congress than Democrats. I think, the message, the lesson I take away and the message I would give is let's see how things transpire, because politics in Washington are not always as straightforward as simplistic minds say they should be. This week was very interesting. Wednesday, yesterday, while the House and Capitol were under siege, you actually saw the stock market go up to 500 points on the day. You saw the dollar strengthening and you saw gold fall sharply. A little bit counterintuitive, similar to politics in Washington. I do think that the political disarray and political changes are probably positive for gold. Looking at what happened Wednesday, I think that it tells you something. It tells you something about the markets, financial markets, gold market, silver market. And it also tells you something about politics. US politics are important. US economics are important, but they're not the end all and be all. And even there, the economics of the US are not necessarily wholly dependent on US politics. I think what we were seeing on Wednesday with gold prices lower and the dollar and stock market higher was actually a reflection of the increase in yields on US bonds and the view that, yes, spending is going to be higher, deficits will be larger, debt will grow faster, and that will apply some upward pressure on interest rates. And the Fed will be hard pressed to keep interest rates from rising because they still need to be accommodated. Some people are worried that they'll see tax increases under Biden with Democratic control of both houses of Congress. That's possible. Our expectation is that any significant revisions in the tax code will wait until at least the second year of a Biden administration, because in the first year, they're going to be focusing on fiscal stimulus, fiscal programs, getting the country back on track, and raising taxes is not particularly a good thing to be doing at that point in time. So our view is that interest rates, as always, are probably the most important factor, and we're paying a lot of attention for that. Our view pretty much remains the same as it has been. We have a precious metals advisory that's coming out later this evening. Our clients will get it Thursday night, Friday morning, their time, depending on what part of the world they're in. It discusses Treasury bond yields, discusses the other factors that are there, US politics, the pandemic. It's available for a single issue purchase on our website, or you can subscribe to it on an annual basis. It's a monthly report, our Precious Metals Advisory, and it's pretty good. It reiterates and amplifies and clarifies and updates our expectations for metals prices, which is that they'll probably be rising over the course of 2021 and 2022, with even stronger price increases beyond that. We think that silver and platinum will outpace gold and palladium. Gold, we do think, will probably increase maybe 8% on an annual average basis. Our expectation for silver is much more dynamic, about 36% increase on an annual average price. That's partly because the price has already increased in the last 3 to 6 months, so that you're operating at a higher base than you saw in the first half of last year. But we do think that silver will play catch up with gold. Platinum will play catch up with palladium. Platinum, which is now above $1,000, having traded between $800 and $1,000 for much of the last 5 years, probably will, in our view, stay above $1,000, at least on a quarterly average basis, over the next several years, and will move higher for a variety of fundamental factors, and also as the auto industry and auto purchases and sales recover over the next several years. So the Precious Metals Advisory is coming out tonight. It outlines in much greater detail than here our views for the markets for 2021 and 2022, with some discussion about longer term issues and some discussion about shorter term issues that we see as being important. And we welcome you to buy a copy to see what it's like. And in the meantime, we'll talk to you next week. Thank you and take care.